Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And if you're on Rumble, give me a follow there. I've done that too, just to see how that platform works. Hopefully, I'll be on more, but for now. So, just want to do a little disclaimer. Nothing I should be Nothing I say should be construed as financial advice. This is just my opinion of what's going on in the markets. If you do want to invest, consult some professional advisor. So, anyway, I just wanted to get into a couple of things today. There was lots to cover, some things that really caught my eye. And so I'm just going to talk about them. I decided to do a little bit longer, just some of the things I was So first, let's get into gold versus the stock market this year. So if you look at it year to date, I was looking at the SPDR, the S&P 500 ETF, and if you look at it year to date, total return was 17.36. So that's the how the market's performing. I was looking at the Dow ETF, DIA, SPDR, Dow Jones Industrial. They don't have a lot of it's hard to get year to date returns on a lot of these charts. It's really so I'm just going by year to date total return 9.2%. So I just have a hard time but yeah, there it is 377 406. So look at it, it's really gone up, then it comes down, really up there, comes down, but it looks like it's going to try to break out again. So, but yeah, there it is, 9%. But if you are following it, let's just go to the next thing. This is the GLD, which I'm not a big fan of, but it's up 21.35. So the GLD is outperforming the Dow and the S&P 500. So gold is outperforming. Just looking at that. There's a lot of people say gold has to start outperforming the stock market to get into a bull market. And so if you are a believer, I think it, and SLV, look at that same thing, 21.35. The SLV, it's going year to date right there. And then it came up there, but it's up 21.35%. Doing pretty well. And the mining index, we'll look at a couple here. This is GDX. That's 24.12%. So the miners are outperforming. Let's see GDXJ. Let's go look at that. GDXJ, the year to date. Of course, it can't just settle in. And if you look at the year to date, this is 22%. The juniors are not performing quite as well. And this isn't really too much of a junior, but SILJ. And looking at the silver miners, let's see where the year to date, that's 20%. So if you look at it, the miners are performing well. They're not significantly outperforming the bullion, but they are outperforming. So if you look at it, gold, I think this will continue for the next at least couple of months or year, at most maybe year and a half. I think gold for the next 20 years, not all at once, but will outperform the US stock markets and equities index. So if you look at it, this is very good news for gold. So that's why I think gold's rise will continue. It doesn't mean there won't be corrections. It doesn't mean if you actually look at it, gold just broke over 2,500. And if you look at it, if you were listening to this channel, you would know that I was talking about Gold was around 2,400. Let's see if we can get a little spot price on the chart. Of course, I hit gold for the chart. So let's just do a year-to-date chart. And so going back, this is in July, sort of right here. This is where it bottomed, and you can tell I was talking about yeah, around July, how this 2,400 level was just starting to hold. And if you look at it, that looks like a solid green. I'm not a technical analyst at all, so do not do it. But you look at it, that's new all-time high. That looks to be strong. And I think this is going to go up. And I think this, if you look at it, I guess the going all the way the trend line, so it looks like there's nothing to break. If you go here, nothing. So yeah, if you look at it, looks healthy. Like if you look at that, that came up, consolidated, that came up. Then it's sort of, and so it looks like it's probably gonna go up some more here. And so yeah, 25. So looks like 2,400 is the new floor around. This is the new floor. It broke up and it just, I pointed this out. Even though I'm not a technical analyst, a lot of technical analysts got this wrong. They were talking about how silver wasn't going to hit 30 and corrected. So whatever they know, I'm not a technical analyst, but I got this right and the technical people did not. So 2,400, and it looks like it's going to be breaking. As you can tell, my target is around 2,700 to 3,000, and I think you're going to see a lot of problems and force majeure, forced selling. That's why I see forced selling. Uh, and just going back in the why I think let's go into some of the news now though. But you can see I was talking about this. So on this channel, I've been talking about it basically during the summer. That how this 2,400 level, you can see just go around the 2,400, come back up, go down, come back, and it's just kept the 2,400 level basically since early July, just always helped. So I might have even been talking about this in May. It came down 2,300 held, and then it just kept, you can just see the higher lows. This low 23.52, 23.8. This was probably 297. It was there for like a day, and then it just kept coming back. So, and the GDX was just doing well. So very bullish momentum, and it looks like 2,500. It's gonna try to come up and just keep going up. So as you can tell, my target, that's when I'll probably start. And I think the miners, 27, 2,800 miners will just rip roar with them, play massive catch up. So let's go into the fundamentals. And this is more of a long term thing of the US. Caught my attention. Amazon's troubled drone delivery program faces latest challenge. So if you look at it, latest, it means more than one. This is a reoccurring challenge, meaning there's been reoccurring challenges, not this in particular. Annoyed residents. So, and this is what I say: this technology euphoria, it's just not going to work. Robots were not meant to run the world. FAA approval to expand its drone delivery service. Programs struggle to get off the ground. Yeah. Now facing scrutiny from College Station residents complaining about noise levels. And then look at this. They're now moving drones facilities further away from neighborhoods. So there's their drone service. I don't think much of it will come. So look at this. Sounds like a giant hive of beeves. Probably is. Who knows? I definitely can see that. Noise complaint is the latest challenge of Amazon's drone program that's been struggling to get off the ground since 2022. So it's been around 2 years. Look at this, missed deadlines, layoffs last year, cost cutting efforts, halted progresses. So as you can tell, a lot of problems. This whole AI, it's not a panacea. They can't even get these drone services, which in the public conscious is sort of accepted. A lot of people, I don't think they hate drones, but they're sort of accepting them. People buy drones, and there it is. If you look at it, fantastic technology, wrong location. This is like with a lot of environmental, not in my backyard. A fly coming by your ear over and over, and you can't make it stop. So, yeah, if you look at it, it is waking us up and disturbing our ability to enjoy the outdoor and even our indoor spaces. So, yeah, if you look at this drone, this tech revolution that the elites want, it's just going to fail. It's not doing well. So many kinks have not been worked out, and I don't think they ever will be worked out. So anyway, that's just the latest. You think AI is doing well, it's not. And despite the media brainwashing, just look at this Amazon drone deserve. This is the biggest, largest, richest, most powerful company. And it's just not doing well. So anyway, let's get into more things. This caught my eye. Google, one of the biggest benefactors, funders of this sort of economic system, and they want, but now US considers a rare antitrust move. Google, I just say it couldn't be one company, this is sort of poetic justice if this does happen. Uh I don't think it will, but one of the funny things, they tried to do this with Microsoft 2 decades ago and it did not happen. But they're going to ban exclusive contracts to Google, which I mean, they sort of do that. They'll have subprime or prime and subcontractors, but divest Androids and operating systems and Google's web browser Chrome. So they might force this. I don't know if this will happen, but this will sort of be poetic justice, sort of, uh, for Google, in my opinion. I think they should. I don't think they will. Higher education. And this just goes to show how bad the economy is. And this is why the economic data is going to look worse. US colleges are cutting majors. I don't know which ones they're cutting, slashing programs after years of putting it off. So now they're doing it. This is going to, so yeah, eliminate music department, slashes 42-degree programs and 50 minors. So yeah, even though I, I'm not going to take an opinion, but this is less people are going to lose their jobs, less spending because these degrees they have professors, they have whatnot, students. This is economic activity. There'll be less people going to college, and regardless, this is not a what you think of college. This is not a good sign of this is not a good sign of the economy. So cuts more than just saves often create turmoil for students. Check signs up for student loans. This will be a problem if people go to school to get these degrees or minors, and then they incur this student loan, the program's cut. And I would say in this case, there should be loan forgiveness because they offered a major, they offered something, and then it was taken away, and it's a federal program. So yeah, if you look at this is not a good sign of the economy. So if you look at it, there's going to be this will restate in job losses, less spending, and everything else. So this is one thing they talk about, but the education. So I'm not. But let's also go another sign of, and this is just a guy who's showing Warner Brothers, Discovery, revenues, cash flow decline, and miss. Discovery, I like Discovery. It has a lot of good animals, a lot of good animal shows. Well, used to, not anymore. But if you look at this, revenues were about 4% below expectation, declining across segments, and cash flow tumbled. This is a bad sign because Discovery Channel gets a lot of money, within the Shark Week, and there was already Shark Week. I didn't watch it, but I love Shark Week. But the quality of Shark Week has gone down significantly. It's not even about the animals anymore. Warner Brothers, a lot of these get money off revenue, off advertising, which shows corporate America doesn't have the money. Net loss 9.9 billion, widen. So there is non-cash goodwill impairment, but that just goes that to show goodwill is through acquisitions, and they had to impair it because the acquisition turned out to be the acquisition, whatever company they bought, turned out to be worse for the company than thought. I know that from being an accountant, so that's actually a worse sign. But yeah, this just goes to show a lot of these, where it's streaming or whatnot, people don't have the money, so they'll cut back on streaming services. But yeah, Warner Brothers, Discovery, this is not good. And more forward looking, this is another reason I'm going to go to this thing that caught my eye right here. Employers trim raises and bonuses. I tried to get into the Wall Street Journal, but it's behind the paywall, so I'm not going to pay for this. But you can see this is good. This is bad for consumer spending, retail sales, whatnot, when raises and bonuses are now being trimmed. They're not raising as much, they're not trimming as much. And this is to show how dysfunctional our leadership is. Yeah, they're worried about wages being too high. Federal Reserve officials worried you're getting paid too much. Oh, this is August 16th. Yeah. This is what they're trying to do. This is their actual policies. Wage growth, while slowing down, is still too high to allow inflation to fall where they want. Well, they don't realize if they don't let wages expand, then prices, which they want to stay high, are going to decline rapidly. Prices are a product of wages. Some economists think rapid wage growth in recent years has fueled inflation, while others think it's not. So, yeah, there it is. So, look at that. Their policymakers, the Fed, they actually think inflate and wage growth isn't slowing. So they want the Fed put upward pressure on interest rates on all kinds of for mortgages and auto loans. The pressure makes borrowing harder and discourages spending and effort to bring supply and demand into more balance. So yeah, these people, that's what they're worried about. Worried about you getting paid too much. Some policymakers we have. So anyway, yeah, it's not that prices are too high in general. It's because no, asset prices are what's causing inflation. It's not wages. In fact, if you look at real wages, they haven't risen all that much, even during the opening up of the scandemic. So anyway, that's all I have today. Just stuff in the news I wanted to go over. Hit that like button, subscribe if you haven't, and I will see you next video.